Welcome to our GNCC Espresso webinar focused on navigating budgets, planning, and taxes. In the next hour, we are going to discover the intricacies of financial success for small businesses. We will learn about how to create and manage budgets effectively, plus gain some valuable insights on navigating the often complex world of taxes, helping you maximize returns and minimize liabilities. Whether you're a seasoned entrepreneur or just starting out, this webinar will equip you with the knowledge and tools to steer your small business towards financial prosperity. I am MISHKA BALSOM, and I will serve as your moderator for this session. This session is powered by Meridian Credit Union, Ontario's largest and Canada's second largest credit union, with over 370,000 members, 89 branches, and 15 business centers. They are committed to investing in the communities they serve. In addition, I also wanted to highlight that through our partnership with the Ontario Chamber of Commerce, actually Meridian Credit Union has offered all chamber members banking benefits and an extensive affinity program to help you actually save and benefit on your financial commitment that you have made. So it's not only available, these services are not only available to you and your colleagues, but they also extend to your family members, and we really think it's worthwhile exploring. And what you will notice in the chat is that there will be a link to that specific affinity program for you to explore. And if you have any questions about it, please feel free to reach out to us and we will redirect you to someone at Meridian Credit Union. It's worthwhile taking a look at. And now it is my great pleasure to actually introduce our today's panelists. We have with us KHOURY with wefinx. He is a seasoned finance executive and CPA with 25 plus years of experience who co-founded wefinx Professional Corporation. His expertise in corporate finance, tax planning, and digital accounting contributes to the success of Canadian startups and SMEs. Samir is a visionary leader and community supporter, and he envisions wefinx as Canada's premier small business provider. With qualifications including a CPA in Canada and the US, as well as a high number of others, and his BCom from Concordia University, he prioritizes excellence and enduring client relationships in his entrepreneurial journey and community endeavor. Samir, we're really glad to have you with us today. And Samir is joined by Steve Onton, a distinguished finance graduate from Brock University. He's the Regional VP of Business Banking at Meridian Credit Union. He's leading a team of experts, and in doing so, he and his colleagues excel in providing strategic financial solutions to clients. His commitment to driving financial success for business is evident in his leadership at Meridian. Leveraging his comprehensive knowledge, he navigates the complexities of financial landscape, focusing on excellence, client relationships, and strategic vision. Additionally, Stephen's extensive community commitment includes serving as the vice chair of GNCC, very happy about that, and further contributing to the growth and prosperity of the organization he serves. Gentlemen, I'm really pleased that you're with us, and I'm really excited actually about today's topic because it is something that makes such a big difference and can make a difference to all the people that are tuning into this webinar, or he maybe later on actually will download it to get all the tools that they need and answers to some of the critical questions that we see coming forward on a regular basis. To all the attendees and participants, thank you so very much for being with us. Today's format is an interactive one. We are hoping and have already received a high number of questions. We're committed to getting to all of them. And we also wanted to direct you to the chat function in case you have any questions or any technical difficulties. Please utilize the chat function. We will see all the comments that are coming forward, the questions or assistance that is needed, and we'll respond to it, and we're committed to getting to all of it. Additionally, if you'd like to enable live transcript, you can find that option on your Zoom screen at the same time. When we looked into here at the questions that have come forward from the community, we can actually look at them almost in 5 categories. The categories really is looking at budgeting strategies. There's a high number of different ways to approach it, and we're going to turn to our experts to give us a little bit of insight of maybe what works the best, or where they, or maybe even sharing tools that could assist you. The second topic is about tax planning. There's a high number of questions coming forward on that end, and I think we really do need to address that. Then we're going to look at some financial planning tools. There are a high number of tools that are available. It's an ever-changing, very fluid market when it comes to that. And we're going to want to look at that, and because it reflects some of the concerns that you have, but also some of the questions that you have brought forward. And the last two topics are looking at economic outlook and regulatory changes. What do we need to be prepared for to ensure that we're going to have a very successful 2024, or even planning for a longer period out? So those are currently the questions that have come forward to us. You have texted them to us, you have emailed them to us, or shared them as part of your Eventbrite registration. So thank you very much for that. And we will continuously look at the chat to get more of your questions. So on that note, I think it's maybe at this point best when we start with the first topic that we have. And the first topic is around different ways to budget. And the question that has come forward by a number of different people, different sizes of and types of businesses as well. But the question was, what key budgeting strategies do you recommend for small business to ensure financial stability and growth, considering the unique economic landscape that we are in and that we're finding ourselves in this province and in this country? And so maybe, Steve, if I'm going to start out with you, and then I'll pass it on to Samir after that. Maybe if you can start with this one and just explore some of the strategies.
Strategies around budgeting. Good question. And small businesses certainly have been faced with this over the last number of years. What we often see with businesses that are very successful in this, and we deal with a lot of businesses at Meridian, certainly a lot of small businesses, are it's the planning process around it. It's all well and good that we talk about, different strategies, different processes. It's about understanding first and foremost, what are you going to be good at? What do you want to be good at? And maybe you already have, very specific skill sets, very specific products that you're dealing with. And then it's about scaling those up and being very focused on what you are good at. And then around the budgeting side of it is understanding the costs of scaling that up. And when I say scaling up, it doesn't mean always you have to grow for the sake of growth. It doesn't mean you have to get big for the sake of being a large business. It means being profitable with those products and services that you're offering, and ensuring that costs don't get out of scale with what you're trying to accomplish. So in terms of very specific strategies around it, kind of keep it simple. Go back to the basics. What is it that you're trying to sell? What is it that you're trying to promote? And can you do it better? Can you do it easier? What resources do you need to accomplish that? And then it's a matter of promoting it really, really well within kind of the market that you're looking to target.
I really appreciate your take on it, especially the idea of it. How do you ensure that you're profitable? How do you manage your costs and your revenues coming in, but also making sure that it's simple in its approach? See, if I could ask a follow-up question, this is something that has come forward from someone as well, is the sense that sometimes we have a budget that we have, say, like we've been in business for a couple of years as a small business, and then we just base on that same budget, we budget the next time, and we budget the next time. But there's some individuals and practices that actually say, maybe sometimes we should start from scratch again. We should really look at the small business as if you would look at it for the first time, to saying, how do we best set ourselves up, instead of just building on the 2% here, the 3% there, and moving it around from that perspective. And I was wondering if you could give us some insight on that approach to saying, start at base zero with your business.
No, it's an interesting comment. So we do planning in our business as well at Meridian. So I certainly do thank you for the introduction, but we certainly plan as well. And often what I've said to our staff, and what we often hear from small business owners as well, is it's not the plan. The plan is the piece of paper that is the outcome of the planning process. So sometimes you're right, MISHKA, like you're good to set it all aside and say, what are we really trying to accomplish here? Are we trying to do something different? And start right from ground zero and say, again, what are we good at? What do we intend to do? in terms of the next 12 months. Typically, it's a 12-month cycle. Sometimes it's longer than that. You measure yourself maybe monthly or quarterly. But to set it all aside and say, we need to do a refresh. And the refresh, you may end up in the same spot, but it's the process which you undertake is really the critical piece of it. So often we've seen, you know, a nice shiny budget, all prepared, prepped very, very nicely, shown to us. And the questions we often like to ask is, help us understand how you got to this point. And the process which you undertook. Did you start from scratch? Did you use last year's? Did you just kind of layer in sort of just a couple new ideas and change the numbers like you're suggesting, 2 or 3% here or there? Once we understand the process behind it, it certainly will give a lot more confidence in the substance of what is being produced.
And you know what? It's actually also good for, I think, everyone to hear too, is what actually financial institutions are kind of expecting too. And I think it's good for individuals that are actually maybe planning to start a business too, and saying like, be prepared to answer those questions about the budgeting process. Samir, I would like to bring you into this conversation, and you're working with a high number of SMEs. When you look at key budgeting strategies, are there any specific recommendations that you have when it comes to ensuring that a business will experience financial stability and growth? And I think you might be on mute right now, and I can't unmute you.
Yes.
Perfect.
Okay.
Thank you.
So yeah, no, the points that was that were mentioned by yourself, by Steve as well. I mean, there's very good points, and starting from fresh sometimes is always good practice as well, because you always need to look at your goals, as was mentioned. What do you want to achieve? Is it you want to enter a new market next year? You want to enter a new product, a new geography, launching new product lines, and all this, I mean, will impact not just a baseline budget that you had last year and just increasing it by 2, 3, whatever factor as CPI inflation. You want to increase your budget or top line or costs as well. But it's very important when doing this exercise is to monitor your cash flows, because cash flows are important for the sustainability of the business, and this is what you want to budget. When businesses look at budgets, they mainly focus on the profit and loss, but at the same time, they sometimes often forget about budgeting for cash flows, because that's very more important for long-term sustainability in the business as well. So you want to look at cash flows. You want to look as well at not only at expenses and type of expenses. Are these variable costs? Are these fixed costs? I have to enter a new market. Do I need to hire new staff and new employees? Are these going to be hourly based? Are these going to be on fixed salaries? Do I have to get a new warehouse fixed expense? Do I have to get a new rent for my showrooms, or I'm going to go and sell online? Is going to be additional expenses, commissions, or I'm going to hire an agent. That's going to be additional variable costs. So you have to also separate your costs as being variable costs, fixed costs, and this will help you to build an estimate or budget for your expenses as well. On top of this, you also want to understand the timing of these cash flows, because the timing is very important as well.
You know what, Samir, you're bringing up an excellent point. When we often think of businesses and small businesses, we look at them and thinking of the private sector. But when I even look at the nonprofit, which is a high number of organizations, and their focus on cash flow is significant, and their eye on that element of it is critical to their success. So private sector, but also nonprofits at the same time. Samir, as a follow-up, we are experiencing a significant increase in utilizing technology differently, introducing more digital tools in other areas of our life. And I think when it comes to the budgeting process, are there some very effective tools like software or apps that you have found that make budgeting easier, that you can recommend to businesses, small businesses, nonprofits, to saying like, utilize this because it will make it easier for you and the process of it?
Absolutely. This is a very good question. Yeah, absolutely. Well, I mean, with the automation, with technology, and even with a new era of AI now, artificial intelligence, I mean, there is plenty of softwares and tools available. You just have to make sure what's the right tool or software that your business need or yourself that you can manage to work with, as well as a small business or as a business owner. and customize it and customize the needs and the reports on this budget as well, and the reports that will be produced as well, because you need to connect, not just create a budget on this tool, but you want to make sure that this budget speaks to your actual results, that speaks to the software that you do use for the bookkeeping tool as well. So you want to make sure that there's an integration with the bookkeeping tool as well. So I mean, some examples: the QuickBooks Online, they have a good module for budgeting. FreshBooks, Sage Accounting as well does. There's Plan Guru. There is YNAP, which is You Need a Budget. Mint. I mean, there is plenty of software, but you have to make sure which one is more user-friendly, which one is easier to use, which one integrates with your bookkeeping tool. So you have to look at the different factors before deciding on which software to use, and of course the cost, because these are not for free, but I mean you have to pay for additional cost to use these budgeting modules, let's say.
To me, there's a follow-up question to exactly this question that has come forward. And the question was, are there certain industries or sectors that are leaning more towards one versus another type of software to assist them in their budgeting or in their overall bookkeeping process of it? Some of the names that you brought forward, I think, are very familiar to people, but I was wondering if you have noticed that industries seem to gravitate towards more to some in some areas versus another, or if it's really just determined by maybe the size of business or the cost allocation that a business had brought forward.
I think it's it's the size of the business and the sophistication of the business as well, right? Because I mean, these are typically these softwares. They say if it's a bookkeeping tool, if it is a budgeting, they try to make it everybody can use it all. They don't customize it for a specific industry, let's say per se, unless if you go into the bigger size of businesses, mid-sized, large-size businesses, then there's a lot of sophistication, and sometimes you will have a more customized, sophisticated tool or software that you will use, as Oracle, Hyperion, as more expensive tools. But when it comes to small businesses, I mean, a lot of them will do the job, but you just have to see which one that's easier to use, which one is as user-friendly, let's say, and look at different criteria. Is it support, accessibility, and what's the privacy, and does it support the expense tracking as well? Inventory modules, payroll module, timesheet support. Let's say if you have a services, professional services business, you would need to get some maybe another integration to a timesheet system where you can also budget for the hours and the time that's used on the different services that's provided. And most of these softwares, they provide free trial, so it doesn't hurt to try a couple before deciding which one to go for.
Yeah, that makes sense. The last question related to the same topic is about actually outsourcing some of these services. What we have seen often is when you have a small business, in Canadian terms is defined in less than 100 employees. But when I even look at just our region, we have a high number of small businesses that likely have 10 or less employees. At what point would one recommend to a business to saying, outsource those services? It's going to be more efficient for you than you actually handling it internally. To me, what are your thoughts on that?
To be honest with you, I mean, most of I wouldn't say most, but I mean, a big in my firm, let's say, we do a lot of this budgeting on behalf of our client, because we can help them with the budgeting process, and we can also provide them with the tools and the reports on time at the same time, and we can also have this review meetings with the clients, and this is part of our services. That's one of the key services that we do as fractional CFO services. So I mean, depending on the size, I mean, I don't know the size per employees, but more on the sales and the volume, and if who's going to do this budgeting exercise and who's doing the bookkeeping at the moment, because you want to make sure that there is somebody that's actually doing the bookkeeping on time, closing the month end results, let's say, or the quarter results on time, so the budgets will speak to the actual that's done on time. So if the actuals, results, and the bookkeeping is done once every 6-7 months or at the end of the year, then it defeats the purpose. So you want to make sure that you're sitting on a schedule on doing the bookkeeping on time, so you can match it with the budget that you set early on in the year, so you can get to understand the results and review them. And this is very important.
I agree with you. I want to bring Steve in here into the conversation as well on the same topic. And then there's one last follow-up question when it comes to the budgeting strategies. But Steve, your take on this question.
Yeah, so I certainly am not an expert like Samir would be on different technology, the different programs. But what we certainly do see sometimes, which kind of raises questions for us, is a client or a member would come in, a small business would come in with their budget all nicely done at the beginning of the year. And then as the year progresses, they provide us with their reporting, quarterly reporting, monthly reporting, and we try to stack it up against the budget. And what we find is it doesn't match. And why it doesn't often match is they're using two different systems. They might be using one system for their actual bookkeeping, for their actual financial reporting, and then they're using a different system for their budgeting. And it doesn't feel as comfortable. And what that also means is, we ask questions about, so how are you doing relative to budget? And the answer often is, I don't know. And it's because they could be using different systems. It could be just they're not tracking against kind of what their plan was. So Samir, I think I heard you say as well, like there's lots of different options. And I think I also heard you say, at the very end, let's be able to test it against what your actual results are. And I think it's really important for us as sort of financial institutions, but I think others reading the information as well would be helpful, even for the business owner themselves. How am I doing?
Yeah.
Absolutely.
I think that's an excellent point that you're making, because we can never know how we're doing if we don't have a comparison actually and look at it and saying, like, how am I performing against the KPIs that I've actually set out, especially in a partnership with a financial institution. Steve, I wanted to come back to one more question. It was Samir who had raised the managing of cash flow. And
Right.
I was wondering if what you see, what are some of the best practices for managing cash flow effectively, and how can a small business avoid common cash flow pitfalls?
Sure.
This has been cash flow being so critical to the longevity of any business and the opportunities for growth and stability. I think this is something that I think likely is key to many of our participants today.
No question about it. I mean, cash is king. People have heard that said before. Follow the money, understand where it goes. Samir certainly touched on this as well, as to make sure you know what's happening to your money. And that's profit and loss is good, that sort of paper entries. But at the end of the day, how are you going to pay for things? So whether it's a growth initiative, whether it's a new product, whether it's just day to day, whether it's paying your employees, understand where your money's going, like your actual real cash that you bring in. The other piece is that, and I know Samir, you touched on this as well, like inventory turns, just knowing the timeline of product or services. So if I'm going to bring in inventory, I owe, I got to pay the invoice within 30 days. However, I might not sell that piece of inventory, whether it's part of another process through manufacturing, whether it's sits on the shelf for longer than I expect it. So you've now paid for it. So the cash is out. When are you going to receive the cash to actually kind of cover that cost? And it becomes a cycle. And if the cycle becomes too kind of disjointed, where you're bringing in inventory, you're paying for it, you're bringing in services, so you're paying employees at that point for the services that they're rendering, how are you going to pay for that? And it's a matter of, you need to generate revenue, and you can't generate revenue, which is effectively cash, converting to cash, or collecting receivables. How are you going to actually make the payments? Not just suppliers, employees, insurance, debt payments. There's a whole host of different things that you need cash for. So we often say follow the money, and you're going to find out pretty quickly how the business is being managed.
Yeah, actually, it's an excellent point. I think if we move now on, I think it was a really valuable discussion about the budgeting process. I'm wanting to move on to the tax planning, because there's a few questions that have been brought forward. And it's not that it's separate from the budgeting and the recording and everything else, but it's maybe worthwhile just spending a few minutes on this. The question that has come forward, often taxes can be a challenging aspect for a small business, and I can fully understand that. What are some of the common pitfalls entrepreneurs should avoid when it comes to tax planning and compliance? And Samir, maybe if I bring you into this conversation, and then we have a follow-up question that I might just directly link to you, Steve. Samir, what are the common pitfalls?
Thank you. No, this is, I mean, this is a good, very good question, and this is when a lot of people or small businesses, to be honest, they started to save a little money on doing their own taxes, and then they fall in the traps, and then they come back seeking for help. But we see a lot of people, I mean, a lot of issues with the tax compliance. I would say number one is poor record keeping, having the backup, having the records, and the bookkeeping as well of those records, of those, let's say, transactions, how these were recorded in the systems and the bookkeeping tool and the software, how they were recorded, and having this proper backup for this. And of course, in Canada here, I mean, according to the CRA rules, you have to keep records for at least 7 years back. And some people, I mean, just that's not a very organized way to keep records. Another area that we see a lot is small businesses, how they treat their employees. Are these going to be our own employees on payroll, or are we going to pay them as subcontracts? And then this is affects how the tax deductibility of the benefits, let's say, associated, or the withholding taxes being employees or being as contractors. Contractors, certain industries, construction and others, you have to issue also different tax slips for those paid as contractors. Not only employees get the T4s, but also, let's say, for contractors or subcontracts under specific industries, you have to issue a tax slip at the end of the year as well. Ignoring tax deadlines, we see a lot of people, I mean, busy in day-to-day jobs and operations of the business, but when it comes to deadlines, if it being monthly reporting or quarterly filings with the CRA or annual filings, I mean, often they miss the deadlines, and this has caused them interest, caused them penalties, and cause issues as well. Some businesses, depending on the size, you have to remit taxes on monthly basis, of course, for the payroll by the 15th of each month. But some businesses, when it comes to sales tax HST, there's monthly filers, there is quarterly filers, and there is annuals. Again, sticking to filing on time is very important to avoid deadlines and penalties as well, and so you don't ignore these deadlines. And depending on the size of the profits, let's say end of the year when you file your corporate tax return for those incorporated businesses, usually the CRA will send you or will give you an estimate, or your accountant will give you an estimate of how much expected income tax installments that you have to make next year. And this will avoid you, of course, as well, interest and penalties for next year taxes as well. So you have to prepay in advance for your corporate taxes.
Yeah.
So these are just examples.
Yeah, no, I think you're bringing up some excellent examples, and many of them actually we have heard in talking to our clients as well, and especially you mentioning actually the penalties. The penalties are often much higher than what businesses are expecting actually them to be. So keeping an eye on the quarterly, mid-year, end-of-year requirements when it comes to that speak to actually what we talked about and started out having this conversation about, is being planned and organized and structured to navigate that. Steve, one of the questions that has come forward too is, how can small business effectively navigate the tax regulations to optimize their financial outcomes? And specifically, people are asking, are there specific tax incentives or credits that entrepreneurs should be aware of for strategic tax planning purposes?
So who is that? Sorry, MISHKA, is that for myself or is that Samir? Okay.
It's either one of you who is like there. So the question as a follow-up that has come forward, are there specific tax incentives or credits that entrepreneurs should be aware of as they are planning, maybe ones that are often known to a lesser degree? And the question can go to either one of you on this particular one, but it's the question is that are there, or even if we don't mention specific ones, are there resources that people should tap into to saying, here are places to go when it comes to that end of it? And I'm not sure, Steve or Samir, of who would maybe like to take a look at that, but I'm open.
So,
Samir? Okay.
Yeah, I can go.
I'll give the answer first, Samir.
Okay,
we just refer them to their accountant. So Samir, over to you.
Very good. So here we go. I actually, you know what, Steve, I'm so much with you. I've always said businesses, there's two people you need. You need a legal advice and you need an accountant as you're moving forward, and it's going to really assist you in your overall setup. Samir, so are there any, and maybe the question is too specific at this point, but are there specific tax incentives or credits that entrepreneurs should be aware of?
Yeah, I mean, again, depending on the size of the business and the industry as well, but I mean, could be a lot of benefits or incentives, let's say, or tax credits that the different businesses can take advantage of. As incorporated businesses, if you are a small business with profits under $500,000, you're entitled to a lower tax rate. Let's say in Ontario at the moment, the normal tax rate, corporate tax rate, combined federal and provincial, is around 26.5%. But if you're making less than $500,000 in annual profits, you're entitled for a reduced tax rate of 12.2%. And this is for the small business deduction, of course, available for those small businesses to support them. So that's, I mean, the top one that a lot of businesses that will be encouraged to take advantage of. And usually this is done at the year end when you do the tax filings. Depending again on the industry, if it's let's say you do a lot of SHRED, let's say scientific research and development, there is a lot of SHRED tax credits that businesses could take advantage of. And this is where you can get credit for a lot of the expenses, a lot of the costs of the doing business. So a lot of transactions, this is what entails a lot of record keeping and which activities qualify the business for this SHRED credits. Of course, when you own equipment, when you own furniture, when you own commercial spaces, say commercial buildings, if you own any asset that the business owns, there's always take advantage of the CCA, which is the capital cost allowance in lieu of depreciation in accounting terms. But the CCA rates could be good, and depending on the timing when you purchase an asset, you could always entitled for, there's a half-year rule that you can take advantage of as well, to take advantage of more tax credits and write-offs, to say. Home office expenses, if some businesses are based on working from home, since we have seen the increase in this since COVID, and entitled to use the home office expenses, depending to a prorated portion of the cost of running the home and running the home office as well as a prorata of the entire space of the house. Of course, there is some vehicle use for the business that's as long as justified, reasonable as a business use, that also could be taken advantage of. There is also the lifetime capital gains exemption that's entitled as well as for business owners. But I mean, there could be a lot, but and could be a big list. But I don't know if we want to add any more, Steve. But
I actually have a question, and this is sort of the real life that we live with sometimes, and I think small businesses live with on the whole tax side of it. So a small business comes in and asks for a loan, and they're showing no profit, and so the metrics don't work as well. So all of a sudden, it's the debt service ratio doesn't work. Just a whole host of things don't work. So on paper, it might appear that they can't afford to pay for a loan. We know they can. We know the business, we know the owners, we know what's happening. And this is the response we often get. Well, our accountants do everything they can to write off as much as we can so we don't have to pay tax. How do we deal with that? I mean, it's an accounting question, and I'm sure that you give good advice to kind of provide some balance between showing some profit so that when they do show up for a lender, whether it's an equipment loan, whether it's a traditional lender or otherwise, and kind of reducing their tax bill at the end of the year. How do we strike some balance on that?
Steve, I think that's an excellent question, actually, that a lot of businesses find themselves in. Samir, over to you.
Yes, thank you. I mean, the answer to this question is going back to the first question that was raised on this call, on this webinar, about budgeting. How do you plan? What do you want to be? You want to be in 3-5 years down the road? Is it you want to save on taxes and minimize your taxes and write off everything that you can under the umbrella, or you want to plan for the growth? You want to plan to, I want to go in 3 years, I want to be there, I want to get a loan, I'd like to grow at this much, I'd like to become from 1 million, I want to become 5, 6, 10 folds in 3 years time. So this is part of the planning. I mean, if the plan is just to save on taxes, then they're in the wrong line of business, they're in the wrong business, and this is not, there is no sustainability for this to go and lend money to these businesses, I would say. But I would say, yes, if they're needed for justify a proper justification project or mandate, that could be done. But as long it makes sense and it's within the business plan that they are going after, I would say.
I think yeah, go ahead.
Yeah, sorry to interrupt, Mishka. That's an interesting response. I don't think I've quite heard it articulated that way, where it's like, go back to who do you really want to be in 3 to 5 years? That's hugely helpful. And I think that's a great question for, business owners to certainly ask, and also for us to ask back to the business owner to say, so who do you want to be? What do you want to be? So thank you for me.
Yeah. And actually, I thank you actually on behalf of everyone, because I think it comes back to the way we started the conversation, which was talking about the budget and how they perform against the budget, which it should be reflected in if that's their initiative. There's one last question that I would like to get to related to taxes before we're actually going to look at the economic outlook, which was another topic. But Samir, this one is for you from a tax perspective. Can you speak to the different ways of structuring organization? For-profit versus non-for-profit, sole trader, incorporation, and so on. If you can speak to that just from a tax perspective, I think this would answer the question from a few of our participants today.
Sure. In Canada, you can run a business through different modules as being sole proprietor, and this is like you're running a business, and you just have to go and register this business with Service Interior. You're just booking a name, registering a name, but you're doing a trade name or you're running a business under your name. But end of the day, it's not a legal entity. It's not separate from, let's say, from Samir. It's Samir doing business as under another name, let's say a trade name. But end of the day, the taxes will be, or the profits from the business will be translated and will be taxed at the personal tax return, at the personal as business income under the personal tax return, at the marginal tax rate, whatever it is at that person's income level, right? So it will be part of the personal taxes. When you incorporate, of course, there is the incorporation. You have a registered entity that's registered, let's say, at provincial or federal level. Will be, as I mentioned earlier, you can take advantage of the small business deduction. If it's has profits of less than $500,000, you're entitled for lower tax bracket, 12.2 versus 26.5. And that's if it's a small business. If it's a regular large enterprise, then that's a bit higher tax rate, of course, but that's as a corporation. Partnership, usually some doctors, some lawyers, accountants, they will go into form as a partnership. Again, the partnership will be a partnership income, and that the income will be taxed at the personal tax level as well, and the personal taxes. And non-profits, non-profits usually, they have different treatments and different exempt from, let's say, paying taxes, because they're not supposed to make profits, right? You're in a business as a charity. You shouldn't have profits to be taxed on, and they should be exempt from taxes.
No, it makes sense. Thank you so very much for that quick overview. And then I'm going to wrap this up because we have to get to like 3 other topics here. And one of the ones that is critical to so many businesses, existing businesses, and ones that are starting out is the economic outlook. We read a lot in any way that we're reading, from newspapers or news sources that we find. Steve, I was wondering, how does the current economic climate impact the financial landscape for small businesses? And what proactive measures can entrepreneurs take to mitigate risks and capitalize on opportunities? And I think it's a really critical question as we are continuously looking at the state of our economy. We're looking at so many factors that are impacting it. Is there anything that could help small business knowing that they have to consider these impacts?
So on the good news front, the Bank of Canada held their rate today. So that's a good news kind of lifetime bit of information in the economic environment. So from our perspective, there's certainly a lot we can talk to from an economic perspective. I'm just going to speak to just interest rates for a moment, because that's an area that's kind of, obviously as a lender, we know that space well. Where we're seeing people, small businesses get caught was how fast the interest rates moved. It wasn't necessarily the level to which they're at today. And it kind of ties back into budgeting again. 720 is the prime rate, which is certainly high, way higher than it was, but it's how it got there. It got there very quickly over the course of about 16 months or so. And so businesses, that weren't able to kind of adjust, all of a sudden their line of credits were going from, prime being in the threes, let's say, all the way up to 720, and their interest carry was just that much more. So if they were borrowing money on a variable rate for maybe a new building loan or equipment or construction, if we think about the whole housing market, all of a sudden their carrying costs were materially different. So in terms of where do we go from here? Bank Canada held their rate today, so that's great news. Into 2024, there seems to be some sentiment in the market that rates will kind of level out and maybe come down over the next 12 months. The jury's still out on that. It's going to depend on inflation, how we measure that, and what that really looks like. There's no question that disposable income is down. So if people are selling luxury products or products that are not sort of food, gas, things that people need and have no option but to spend money on, I suspect that those businesses will have to kind of figure out ways to maybe change their product mix. How does it complement maybe kind of the necessities of life as opposed to maybe the luxuries of life? So that's certainly an area that we're seeing people are kind of asking those questions, or maybe they're paring down inventory so their carrying costs are just a little less. Being a little more specific about what they're offering, how they're offering it, reviewing the cost side of the business. Are they being as efficient as they can? We talked about the whole process of budgeting through digital means. Are they using means that are maybe a little more efficient than they were historically? Labor, tough market right now to try to find good people. And when I say good people, it's people that have the right skills, and there's always a shortage of good skills. So there's a lot that certainly that small businesses are dealing with right now. I think many of them have actually adjusted and changed already. When we get into 2023 is probably the toughest year that many have faced for a long time. And I think 24, there's a lot of optimism out there that things have leveled out and they now know what they're working with a little bit better. So I'm very optimistic that businesses that have made it through the last 3 to 4 years will continue to grow and do well.
I appreciate that perspective. Actually, we hear the same actually in the community too. There's a level of optimism looking forward, and especially taking into consideration today's announcement as well as an understanding that maybe we are managing our economic situation right now, and it's stabilizing a little bit. And whenever it's a little bit more predictable than what we have seen over that 16-18 months period of time where it really went up, it does make a difference. You touched on a couple of things that maybe organizations and businesses need to look at, like levels of inventory and other areas. Are there things that when you have entrepreneurs, when you have small businesses coming to you and they're saying, we want to invest in A, B, C, D, or something like this, and where you're maybe looking and say, like, maybe avoid it at this time, maybe there could be some traps around it, or maybe it wouldn't be the best time. So what are some of the, and this is a question that has come forward, there might not be, but are there some bad investments that you've seen businesses make, and how can we avoid falling into that same trap?
Right. I think, bad is a tough word, but I think in terms of maybe not a sustainable investment would be, for an example, we've seen it where a manufacturer, small shop maybe purchases a piece of equipment that is only really usable for one job right now. And they're like, well, we need this to produce this job. And it becomes a matter of, so how do you share the cost of that piece of equipment over just one job or just one product? Can you perhaps outsource that particular piece of it and still retain a customer? So it's a matter of being able to invest wisely, invest for the future, and go back to the planning again. Is what is the investment here for? We've also seen it with just buildings generally. So they're growing quickly. A business is growing quickly, whether to maybe hold inventory or produce product, or there's lots of options why they need to kind of change buildings. And they buy a property or they rent a property that just is not suitable. It might be suitable for 6 months. It might give them some relief initially, but then they find themselves in the same bind. And it's a matter of going right back to what Samir said, like, who do they want to be? What do they want to be in 3 to 5 years, and plan accordingly. So that when they're investing in capital, which is often where the costs lie, can it be used to kind of meet what they're trying to accomplish 3 to 5 years from now? It's no small undertaking to buy equipment. It's no small undertaking to kind of buy buildings, renovate buildings, change configurations. And if they can't sort of extrapolate that over multiple products or over the next couple of years, it becomes very expensive for kind of a very short-term gain.
That makes sense. Samir, I want to bring you into this conversation and maybe shift a little bit from economic outlook again back to financial planning, because there's a number of questions that have come forward. This one, but it does tie into the economic outlook at the same time. Growing a business often requires taking on debt and finding capital. How can small business strike the right balance between ambitious growth goals and maintaining a financially healthy budget? And it kind of speaks a little bit to what Steve had just mentioned, but I was wondering what is the right ratio? What is the right balance when someone looks at it and saying, like, here I am, not that it's safe, but it's predictably maybe more stable to move forward as such?
Mm-hmm. Yeah, good question. This is a very good question, actually. The right balance. I mean, again, I mean, with a business plan and where the business wants to be, and let's say, according to this 3 to 5 years business plan, they'll have to look at how they're going to finance this, let's say, expansion. They have to see how they can finance this through their internal resources from the internally generated cash on the business, or they have to go and get credit and get some financing from lenders, from banks, from family, from friends, or private lenders, whatever it is. So they have to also see if they need if there's going to be a cash shortfall on their business plan or their annual operating budget, and if they need to go and borrow money. And that borrow money could be through 2 streams. That could be debt, as mentioned, through the banks or lenders, or it could be under as an equity injection. And this equity injection, is it being from myself, from the owner, from the shareholder of the business, or bring in additional shareholders or investors into the business, or maybe can bring in some family members who can invest in the business. So there's a cost for different, of course, there's a cost for financing the cash needs and financing the growth of the business, of course. The least expensive one, of course, I would say, is the internally generated cash from the business, from the profits, from the cash generated from the business. And with the high interest rates now, I mean, for commercial lending and for loans for businesses, I mean, it was in the rise this year. I don't know if the next year is going to take a smaller break, but it's still a high cost for small businesses. Maybe equity injection will be right balance between equity versus debt. Have to measure what the ratio will be for, depending on the size of the business.
Yeah, thank you very much. I really appreciate that differentiation. Steve, when you look at suggestions that have come forward, and especially from startups, any recommendations of what are good sources of funding and capital for startups to look into, areas that maybe we can explore and saying, like, here is something maybe that I hadn't considered in beforehand?
Right. Not a lot more than what Samir suggests. I mean, a lot of times it's family and friends is where they start, and then they certainly will kind of go to a traditional lender and ask them for kind of participation. It is difficult for startups to actually borrow money directly from, your traditional lenders, typically because there's no track record. And, lenders want to see a track record. How has this business been generating sufficient cash to repay debt? And if it's built off of a budget and a plan, despite how good the plan could be, it's still difficult for a lot of lenders to wrap their minds around that. The other option is I'm going to give a shout out to some of my colleagues at BDC. They certainly have programs for startups, and they also have, a lot of on the capital side for sure. And they'll typically lend kind of on a different parameter than what a traditional lender might. So they certainly have options. We can lend through what they call Canada's Small Business Financing Program, which is, a guarantee through the government, which again, it's a little more costly for sure, but it does provide an option for some small businesses to start out. There's pretty tight parameters around a lot of these programs, but they're certainly available and out there. The other thing, I just as a kind of a sidebar to this, to the startups piece, and Samir sort of touched on it as well. It's often we'll get a request for, I want to fund my expansion or fund my growth through a loan, and it becomes a matter of, so to what end? So let's talk about, what are you going to accomplish with this growth? Well, we're going to go from revenues of 2 million to 4 million. And then we start looking through the budgets and the planning, and we're realizing that actually the bottom line is the same or worse. And it just starts to beg the question of, So why are you growing? Are you growing for the sake of growth because it seems to be the right thing to do at the moment? Or are you growing profitably and sort of in a measured way? Because obtaining lending or borrowing money just for the sake of funding some growth where you're not actually turning better profit becomes a bit of a tougher discussion for sure.
You know what, it always will bring us back to it, saying like their long-term forecasts that they have, their long-term ambitions, you know, that it's not just 2 or 3 years, but it's maybe saying like where they're going to be in 5 to 10 years and taking that investment that they're making at this point into consideration. Steve, I have to ask you this question because a couple of people are just like mentioning it, and this is that the last 3 years were in many ways a shock to many businesses. You touched base on it. Samir had mentioned and made reference to it as well. And many of the businesses depended on the SIBA loans and other credits to survive. What are some of the things a business can do now to make itself more resilient to future uncertainties, and especially as many of them are faced now with paying it back, that in some ways has created some difficulty and some cash flow difficulty for some businesses.
Right. The question I often ask small business owners is like, what are you good at? Like as a small business, like, so tell me your story. Tell me how you got to where you are today in terms of like, why did you start this business? And often once we get right down to the core business, like what are they really, really good at? And if they continue to focus on that, and those are typically the businesses that have survived through the last 4 or 5 years. And then it becomes a different discussion in terms of, can you do that either better or can you do it more efficiently? Can you preserve some capital for the times when things get a little bit more difficult? Things will be difficult again. We've kind of gone through, that's what economic cycles are. That's precisely what they are. We've lived through, I think, very unusual times without any questions where businesses were actually shuttered. I don't think we've got a long history of seeing that before. So this is quite unusual. To prepare for another situation that we saw the last 3 years, I don't know that businesses can totally prepare for that in a meaningful way because the unknowns were so great. But in terms of economic downturns where things are just different than maybe when the business started, it just for me, it's like get right down to the basics of why did you start this business? What is it all about? And are you still sticking to the core reason and what you're trying to accomplish here? And many times we see businesses kind of grow and they almost contract back to a size that becomes a little more manageable for them.
That makes sense. Samir, there is another question that has come forward. It's going back to a question we had earlier in our webinar, in our hour that we have spent together, but I think it's very specifically saying, at what point would you say a business is too big to do its own taxes and its own financial planning, and when do they need to hire an outside help? And I think it's probably that we have a number of viewers and participants who are at that threshold where they're not 100% sure if maybe the benefits of one and maybe the move over to moving forward slightly differently.
Yeah. No, this is a very dangerous question, to be honest with you. I mean, what size you do your own taxes? I mean, doing personal taxes, I mean, it's not rocket science. There's plenty of software to do your personal taxes, but it's not about just the tax compliance and tax filing and how you file your taxes at personal level or even at the corporate level or for corporate tax returns. It's the tax planning that's very more important behind the scene. How is the tax planning is done to take advantage of available tax credits, what write-offs you're entitled for as a business, as a person, and how can these be done in the right, legitimate way, right? And with the proper justification, proper filing with the CRA, right? But factors to look at, I mean, when people consider, are you too small, too big to do your own taxes? You'll have to look at the complexity of the business and the size of the business and the scale of operations. Are you, I mean, how scalable the business is is it large business that's with different locations, with different large number of employees, or there's a limited number of employees, or no, there's no people in payroll. You have to look at the geography where they're doing business. Are they only, let's say, GTA location, or they are in Niagara region only business? Are they are in Ontario based, or they're selling to the rest of Canada, or they're selling to the US or to international markets. So you have to look at complications of sales tax implications and tax filings if you're subject to income tax in different jurisdictions. So this is all very important, but it depends on the, again, on the sector, on the geography and the size, the scale of the operation. But I would say it's better to do more tax planning than just doing the tax filings and doing your own taxes and doing the tax filings. Because a lot of small businesses, I mean, they'd like to save some money in doing some taxes themselves, but then they'll find some surprises or get subject to audit by the CRA, let's say.
Yep.
Within a year or two, they have up to 6 years to go and audit you, the CRA always. So
it
you
does
have
make sense.
right balance.
Thank you very much. Actually, Samir, I had recently a conversation with a business that actually has gone international into different markets, and they had utilized actually the same tax experts that they had here within Canada. But because the tax laws are so significantly different in these countries that they're conducting business, that they actually changed their approach to it and actually hired and brought different expertise from those countries as well into their organization to assist them with it. And I thought it was for them, it proved to be a very good, valuable approach to it in the longevity and stability of their business too. So there's so many different paths in making and creating that stability within our own organization. Steve, we might be able to get to this one question, and it's for entrepreneurs just starting out. Again, we're back to the financial principles. What financial principles do you recommend they prioritize to set their business up on a path to long-term success? And I think, again, individuals and businesses are looking forward to saying, like, what are some of the things that you would want to see when they come to you, they step into Meridian Credit Union and saying, like, I'm seeing that they've applied these financial principles to their plan, to their budgets, which gives us an indication that they're on the right track.
Right. A question I often ask entrepreneurs when they walk in is, and some may get offended, but if it's a tough question they need to answer. Is this a hobby or is this a business? And are you looking to make money? Like what is the end result? Because businesses should look, unless you're not for profit, you should have aspirations to make money. And then now there's a whole host of different levels of making money, but nonetheless you should be making money. If it's something that you think is just sort of fun and you want to dabble in as a side gig, that's a different matter altogether, because then your heart and soul will be into it, but you're not there for necessarily the right reasons. So that's kind of the first question we often say. And I also say, don't be satisfied with just paying the bills. I think you can do better than that. If this is a business you want to run as a business, and it ties a little bit into the tax question about, do we outsource this? A lot of times I'll ask an owner, so you're really good at cutting down trees. That's the business you're in. Like, that's what you started. So why are you now in the office every day putting financials together when you can actually easily solicit good support, whether it's a third party like a firm that Samir works with or otherwise, whereby go do what you're really, really good at and do it better, so you can do more of it, do it better, train your staff to do it really, really well, and that's how you can create a sustainable business, as opposed to try to dabble on in the office work, out in the field work, and then try to be all things to all people. Hire good people, hire people that you can trust, and it's easier said than done, for sure. I don't dispute that, but those are some of the things that we often ask, and they're tough questions, but I think they're necessary to kind of get to the root of what exactly a person's trying to accomplish.
I think they truly get to the essence of it. A little while back, we hosted a roundtable on an event for the Federal Minister of Small Business. And one of her recommendations were exactly that. It's like, watch how you're setting up your business. Don't just set it up to replace maybe the income that you had as an employee with the service that you're offering today. Really set it up as if you would almost set up like an international and national business, so that at one point it allows for your business and your organization to grow, to change, to be more resilient, and to be set up for future uncertainties at the same time. It leaves me just about a minute in our webinar, so I can't believe how quickly this hour actually went by. And I was wondering if either one of you is just interested maybe in 20, 30-second closing comments that you would like to make, maybe things I didn't ask and we didn't mention. So maybe Samir, if I start out with you, if there's any advice that you want to leave for SMEs as they're moving forward.
Maybe, I mean, quickly, I mean, we touch on the having proper business plan with the goals and objectives of the business and what they want to be, let's say, in 3 to 5 years. Not only as from profit and loss perspective, but also doing a forecast for the it's not easy to do budget for the cash flow, but it could be done as a cash flow forecast. You always have to get into the habit to say do at least 12 weeks or let's say 3 months forecast for the cash flow, so you can see how we're managing your cash and will you have enough cash to as a working capital to manage the business for the next 12 weeks, let's say, or 90 days to sustain the business. And I would say last piece maybe we touched, embrace technology, use technology. How can this is make your operations and systems, processes, procedures easier and run more smoothly, and there's a lot of technology that's available for small businesses that can make their lives easier. And last recommendation, don't do your own taxes. Do more tax planning.
Yeah, I think that sounds good. Thank you so very much. And Steve, over to you.
What I would suggest is for all the entrepreneurs out there, go for it. Like it's sheer grit and determination that have kind of created the small business world that we live in. Canada is, the economy is driven by small business owners, and I would say go for it. Engage with good professionals around you, but go do what you want to do, because I think that's really how you're going to be satisfied with what you're trying to accomplish, and just engage the right people around you, and you will be successful. I think, like I said, sheer grit and determination goes a long way.
I couldn't actually say it any better, and I couldn't wrap up this webinar any better than exactly with that. So my personal thanks, and on behalf of our organization, thank you to Samir, thank you, Steve, for this valuable information that you've just shared. I think it sets all of us up to being more successful as we're moving forward. To all participants, thank you so very much for tuning in, and my thanks also to Meridian Credit Union for being the power behind today's session. So thank you all for that, and wish you a wonderful rest of the day. Thank you.